Can Starbucks remain dominant in China? China is known for its rich tea culture. Drinking tea is something that Chinese people have been doing for thousands of years. It was a surprise, therefore, that Starbucks has succeeded as it has in China. Starbucks accounted for 58.6% of China's coffee service market in 2017. Its share in the country's coffee chains industry was a huge 80.7%. The same-store sales volume of Starbucks in the third fiscal quarter in 2018 in China, however, dropped 2%, the first such decline in 9 years, making China one of its worst-performing markets in that quarter. The first fiscal quarter of 2019 saw the sales volume of Starbucks stores in China down a further 2%, the biggest drop in the company's stores worldwide. Can Starbucks hold on to its dominance in China? In January 1999, when Starbucks opened its first store in China at the China World Trade Center in Beijing, Chinese people knew little about coffee, with most people's experience being limited to Nescafe. Starbucks seized the lack of Western-style cafes in China at the time, introducing to the country the idea of the third space, a space to spend time besides home and the office. Consumers could expect the authentic American coffee experience in Starbucks stores. The success of Starbucks in China shows that this idea was a big hit with Chinese consumers. In 2018, the top 3 coffee chains in China in terms of market share were Starbucks, UBC Coffee, and McCafe. Their market shares were 51%, 12.8%, and 6.2% respectively. Currently, there are more than 4,000 Starbucks locations in 160 plus Chinese cities. Starbucks plans to open 600 new locations in China every year, a 20% increase compared with the previous target, in an effort to have 6,000 locations in 230 Chinese cities by 2022. Over the past 20 years since Starbucks entered China, Chinese consumers have increasingly warmed up to the brand, and China has become the fastest growing and largest overseas market for Starbucks. The success of Starbucks revealed to other coffee brands the tremendous potential of the Chinese market. Costa, which has more than 1,400 stores worldwide, has opened 459 stores in China. The acquisition by Coca-Cola greatly boosted Costa's share in global coffee business. Thanks to the strong growth of the internet, domestic coffee brands have cropped up in China in recent years. The most prominent of them are Coffee Box and Luckin Coffee. Coffee Box was founded in 2014. It has no physical stores and only takes orders which are served through delivery stations. On November 11, 2017, Coffee Box sold more than 300,000 cups. On December 12, 2017, it sold 400,000 cups. Luckin Coffee sets its sights on the high-quality coffee market, aiming to offer consumers an alternative to Starbucks. It opened more than 500 stores nationwide in the half year since its founding. In addition to cafes and online coffee stores, convenience stores in China are also in on the action. Through its 3,000 plus convenience stores, Family Mart's Pa Cafe has doubled its annual sales for 4 consecutive years. Its goal for the fiscal year 2019 is to sell 100 million cups of coffee. Coffee is not the only beverage making it in China. Tea beverage stores such as Hei Tea, Yidiandian, and Naixue are ubiquitous in China. Long queues at such stores have become a common sight. One survey found that 28% of consumers think it worthwhile to queue 2 hours for a tea beverage that has gone viral on social media. According to Mintel, China's tea beverage market reached $6.8 billion in 2018, a 14% year-on-year increase. So, who will be the winner in this fierce competition and become the next Starbucks in China?